Good afternoon, everyone. My name is Isao Ogata, President and Representative Director of Raccoon Holdings, Inc. In this presentation, I will be going over the company's new midterm management plan. Let us start with the executive summary. First, we will start with a review of the previous midterm management plan. Second is our group management policy, where we will be announcing the Raccoon Group's long-term vision for the first time ever. And third, I will be going over our business strategy in this midterm management plan. Here is a review of key indices. The achievement rate versus the previous midterm plan targets was 79.2% for net sales and 54.3% for operating income. Operating margin decreased by 9.4 points versus the MTP target, as did ROE by 6.8 points. All in all, and unfortunately, realized results came in significantly below the targets we had set for ourselves. That said, this underperformance doesn't extend to all businesses, as results in the financial business were quite good and close to the forecast numbers. That said, results in the e-commerce business, which consists primarily of our operations at Raccoon Commerce, came in significantly below the forecast. We announced the outgoing midterm plan 3 years ago during the mid to late stages of the COVID-19 pandemic. COVID underscored the importance of DX efforts, and this trend translated into a significant inflow of customers seeking our services. However, and despite this initial drive for DX solutions, this boom didn't last, as we started to see significant changes in the second and third years of the MTP. In light of this, we revised our policy halfway through the MTP period to ensure that we optimized the plan. Specifically, we shifted our focus from trying to maximize the value of transactions per customer to growing the overall number of customers who use our services, in the process increasing our advertising spend. While this strategy was successful in significantly growing the number of customers, as you can see here, the realized numerical results came in below the forecast. That said, we believe these efforts mean we now have in place a robust foundation for growth going forward, so we consider our efforts over this 3-year period as vital. Allow me to share with you the Raccoon Group's corporate purpose. The overwhelming majority of our customer base consists of SMEs, with the majority of the services we offer being geared toward customers of this size. SMEs tend to have limited operating capital and resources, lack expertise in areas such as IT, as well as the manpower, and in general tend to have issues with working capital levels. Raccoon Holdings leverages its corporate resources to assist SMEs in their corporate activities. The graph on page 6 shows Raccoon's operations over the years. We took a page out of the playbook of traditional wholesalers in Japan, which have historically performed more integrated functions covering the domains of information, settlement, and logistics. The company was founded in 1993, and we have been able to consistently grow sales ever since, year in, year out. The trend really started accelerating around the COVID years, as it usually takes longer for companies to adopt B2B DX solutions, compared to more proactive and expedited adoption by everyday consumers. Allow me to go over our various businesses. In broad terms, our operations are divided into the EC business and the financial business. Within the EC business, we operate Super Delivery and Super Delivery International. Specifically, these are online wholesaler services geared toward domestic and international companies, respectively. Within the financial business, we operate Paid, an intercompany credit settlement service, and Uriho, a receivable guarantee service for businesses. We have included here a number of metrics that underscore the growth of our various businesses over the relevant 3-year period. We invite you to review this information at your convenience. Next are the Raccoon Group's 3 key strengths. SMEs have their own unique business practices, and our first strength is our understanding of our customers and their respective industries. Our second strength is our technological capabilities against the backdrop of IT. More specifically, we now have a customer base exceeding 500,000 companies. We possess a trove of information related to our customers, in the form of credit information and other metrics like sales and their payment track record, etc. So this information represents a valuable management resource for the Raccoon Group. I would now like to use this opportunity to outline, for the first time in company history, our group management policy and long-term vision. While this long-term vision doesn't set out a specific time horizon, the diagram on page 10 shows our vision for our business over the long haul, as we seek to further grow and expand our Raccoon B2B network. The entirety of our services are geared toward SME customers, and our services are available even to small companies, allowing them to buy and sell products in the knowledge that we always safeguard their interests. In the case of two companies doing business for the first time, professional integrity and diligence are always very important traits, but our platforms really allow these types of companies to form long-lasting trust relationships and grow much faster than they would be able to otherwise. This is therefore a defining aspect of Raccoon's B2B network. I would now like to go over the specifics involved in the conversion to group customers. We currently offer 3 services: Super Delivery, Paid, and Uriho, which boast a combined customer base of approximately 500,000 companies. Our approach to these companies has focused on broad reach with limited depth, and our customer base now exceeds 500,000 companies. Going forward, we seek to offer a common account system, credit provision, and settlement services to customers, as a way to integrate various systems into a more comprehensive integrated package. In other words, signing up for one of our services gives customers access to our other service offerings. Previously, we offered our services on a one-to-one direct relationship basis, but we now want to shift to a more integrated many-to-many trading paradigm that goes beyond each individual account and service. Raccoon has carried out a credit assessment of all 500,000 SMEs we have as customers, and it is this data that makes these initiatives possible. Next is service development. Specifically, we have formulated several methods for creating offerings beyond the 3 services of Super Delivery, Paid, and Uriho. The first method involves spin-outs from existing businesses. Like Super Delivery International was born out of our domestic Super Delivery operations in Japan, we will analyze customer needs and spin out services from existing businesses with the objective of addressing this latent demand. Second, we will consider business and capital alliances with other companies. And third, we will also explore M&A opportunities, including both majority as well as minority investments, with the objective of expanding our service offerings. Next is the projected business scale. As it stands, we are working to improve customer satisfaction within the scope of the services we currently offer, improving service quality, and incorporating valuable customer feedback. These improvements led to an increase in sales, and furthermore, this will be coupled with the addition of new services, allowing us to unlock synergies, as this is key to achieving exponential growth going forward. We estimate the TAM in Japan at approximately 5 million SMEs, so we will continue growing our presence. Within this scope, each new company that enters our ecosystem has stress-free access to our other services. The diagram on page 14 lays out our timeline in terms of the roadmap toward achieving our future vision. The main focus of the ongoing midterm plan lies in improving existing Raccoon services, but we will also carry out the necessary analysis and preparations for the creation and deployment of new businesses. By the fiscal year ending April 2028, we expect our service roster to have grown beyond our current offerings, namely the Super Delivery, Paid, and Uriho businesses. I would now like to go over the priority measures for Raccoon's B2B network in this midterm plan. Our first priority is the conversion to group customers, achieved by providing common accounts to customers and thus encouraging customers to use our services. That said, the goal is to increase overall usage, so we plan on offering incentives. For example, we can offer higher credit limits or points to customers that use several of our services. Through this, we will work to convert customers to Raccoon Group customers. Furthermore, we hope to establish a many-to-many trading paradigm, primarily through the use of paid. In the current system, suppliers entrust Raccoon with the credit assessment, billing, and collection process for each individual buyer through paid. We will now be improving this service by offering several credit lines, thus allowing members to use several different credit lines on trades with different counterparties. Our second priority is service deployment. In order to expand our services, we are building relationships with the startup industry, carrying out LP investment with 8 existing VCs. LP investment is a good way to obtain information from new startups and to deepen collaboration and coordination. By building relationships with startups operating in markets offering future rapid growth potential, we seek to leverage this as a way to grow our B2B network. I would now like to discuss the theme of the midterm management plan. Specifically, the theme of the midterm management plan is growth of each service by leveraging customer needs and improvement in LTV through conversion to group customers. Circling back to what I said earlier, growing our advertising spend allowed us to greatly expand our customer base. Additionally, the end of COVID has allowed us to take a more proactive approach to sales and has created more opportunities for face-to-face conversations with our customers. We want to analyze customer satisfaction levels and leverage these learnings in order to improve our service offerings, thus further improving customer LTV, which is our main priority within the scope of the ongoing midterm management plan. Next are the midterm business targets for key indices. Our targets within the scope of the midterm management plan are as follows. We are guiding for 9.26 billion yen in net sales, 2.38 billion yen in operating income, an operating margin of 25.7%, and an ROE of 25%. We are targeting a net sales CAGR of 15%, around 23% for operating income, a 5.1 point improvement in operating margin, and 6.8 points in ROE. I would now like to discuss our plans to put in place a profit structure that increases operating margin. In broad strokes, our business has very high gross margins, as costs tend to stay relatively low. Specifically, Raccoon enjoys a gross margin of around 70%, meaning this is a highly profitable business with stable SG&A expenses. Since SG&A expenses are not directly linked to net sales, an increase in net sales translates into a significant improvement in operating margin. That said, we changed our policy strategy during the second year of the fiscal year 2022 midterm plan, carrying out significant investment and raising employee compensation to counter the rising cost of living. Ultimately, the 3-year period corresponding to the outgoing midterm plan ended up being quite lopsided toward these types of expenses and investments. That said, this change in our policy strategy has allowed us to grow our customer base and put in place a robust foundation we believe will translate into growth over the course of the period corresponding to the ongoing midterm plan. Going forward, we expect to return to a business structure allowing us to leverage sales growth in unlocking operating profit growth. Next is the scale of our target markets. We believe there is still plenty of room for growth in both the EC and financial businesses. What's more, e-commerce penetration in the wholesale B2B market has only grown from 5.1% to 6.1%. Ultimately, this ratio is expected to reach a level comparable to B2C, which currently stands at 24.2%, although this is expected to happen gradually and take longer. In the financial business, the market penetration rate for receivables guarantee services has only grown from 1.0% to 2.3%, so we believe there is still considerable room for growth here as well. Next is our business strategy. Allow me to start with the EC business. A growth driver in the EC business is the number of buying customers multiplied by our wallet share. Specifically, We will be improving service quality and the attractiveness of our services in order to grow new member signups and secure repeat business from existing customers. Wallet share is basically the value of transactions per customer. Within this scope, we will be adopting a number of AI-based recommendation features to increase repeat customers and thus increase our wallet share. Next is a review of the previous midterm management plan. Within the EC business, gross merchandise value results corresponded to 74% of forecast values. Specifically, the achievement rate for domestic operations was 76% and 70% for international operations. While these are rather disappointing results, circling back to what I said earlier, we more or less treaded water for the first 18 months. We then pivoted and focused on customer acquisition, and this strategic shift translated into an achievement rate of 96% versus the planned target for buying customers. Lastly, while the value of transactions per customer was 73% of the planned target, we view this as a key driver of future growth. Here's an overview of the EC business. We believe that COVID catalyzed the shift to B2B e-commerce, and even after the pandemic, this trend has not reversed and online procurement has become common. Raccoon also introduced a free membership plan starting 18 months ago and deployed advertising and promotional resources, and these efforts have translated into a significant increase in the number of customers. As you can see from the graph, we have seen an increase not just in new customers, but also in terms of repeat customers. In other words, we continue seeing strength in terms of the number of buying customers. Naturally, new customers don't automatically purchase large amounts of products, so an influx of new customers tends to result in a decrease in the value of transactions per customer. At one point, we registered a slump in the value of transactions per customer, caused by an influx of new buyers. We have separated the trend in the number of high-spending customers, which we define as customers who spend around double the average. As you can see, the number of high-spending customers continues on a steady upward trend, and we believe the transaction value has also started to bottom out. The value of transactions per customer had been on a downward trend, but this decline stopped in the fiscal year ended April 2024, and we now expect a robust rising trend in the value of transactions per customer going forward. I would now like to go over the business conditions for Super Delivery International. Previously, the Taiwan and Hong Kong markets accounted for a large portion of revenue, but in recent years, we have seen tremendous growth in the US and South Korean markets, so the revenue breakdown for this business is now more spread out across various markets in various regions. Naturally, we have plans to expand our services into other markets as well. Additionally, the value of transactions per customer continues on a strong upward trend. Next are the priority measures for domestic and international operations within Super Delivery. As I mentioned earlier, we have seen a large influx of customers, and we have also increased the number of touch points with customers. Through this and a qualitative and quantitative analysis, we have been able to improve customer satisfaction and service quality. Going forward, we will continue efforts on this front to further improve customer satisfaction. The pandemic really limited opportunities for face-to-face interactions with customers, which are a source of valuable feedback. Consequently, we'll be creating opportunities for face-to-face meetings while also leveraging AI to improve matching accuracy, improving service quality and customer satisfaction, and growing the value of transactions per customer. I would now like to discuss the main KPIs for Super Delivery. We are targeting 40.35 billion yen in gross merchandise value and a CAGR of 13.4%. In terms of the breakdown, we expect a CAGR of 11.3% for domestic operations and 18.5% for international. We therefore expect a slightly higher CAGR from international operations. We are targeting double-digit growth for Super Delivery. Specifically, we expect a CAGR of 11.6% in the number of buying customers and 2.4% in the value of transactions per customer. Now, a 2.4% CAGR might seem low to some stakeholders, but since we are seeing a large influx of new customers, I believe this to be a reasonable forecast for the time being, as we keep monitoring this metric to see how it evolves over time. Next is paid. Our growth strategy for paid consists of maximizing the product of the value of transactions by member companies and paid's market share. We seek to grow the number of companies that use our services and increase the value of transactions by member companies by further improving the convenience and quality of our services. Additionally, by attracting companies in the e-commerce and SaaS businesses, as well as startups, we will be growing paid's customer base. Paid operates a guarantee business, so keeping the cost of sales under control is extremely important. To this end, we use even more advanced credit screening methods to control risk and keep the cost of sales low. Next is a review of the previous midterm management plan for paid. Realized results came in quite close to company targets, with an achievement rate of 98% for transaction volume and 97.5% for net sales. We delivered a CAGR of 17.3% for transaction volume and 17.1% for net sales. In other words, both metrics continued showing very strong growth. Last fiscal year, we made progress in credit screening automation, achieved higher screening pass rates, and raised the guarantee limit. We made good progress on all three. I would now like to go over the business conditions for paid. As you can see from the graphs, the number of suppliers continues on a strong growth trajectory. In particular, many EC and SaaS businesses use our service, and we can expect further growth going forward. The gray line shows the value of transactions per customer in these two specific industries. As you can see, customers in these industries tend to spend more per transaction and show very high growth levels. The number of buyers has also increased significantly over time, and buyers still have significant unused amounts out of their overall guarantee limit utilization. Specifically, the unused portion of the overall guarantee limit stood at approximately 47.5 billion yen. As I went over earlier when I discussed the long-term vision, offering common accounts allows customers to use the Raccoon Group's other services. So the idea is to incentivize customers to utilize their guarantee limit. Next are the priority measures in the midterm management plan for paid. Our supplier customer base consists of approximately 5,500 companies. We will expand targeting to high growth areas like EC and SaaS businesses, further advancing API integration and automation. Specifically, we will be offering dedicated plans to startups and expand our reach in this area. Additionally, we will leverage customer needs analysis to offer early payment options and paid funding to companies that need cash flow support. We seek to review the screening criteria by improving the accuracy of our credit screening process, thereby encouraging companies to use our service. Lastly, we will optimize service fees by adjusting the rate structure to align with customer needs for each service, thereby encouraging companies to use our services. In terms of the buyers in our customer base, we seek to increase the number of suppliers in order to enable many-to-many trading. Additionally, we also apply guarantee limits to credit card limits as a way to encourage the use of paid. Next are the main KPIs for the paid business. Over the course of the ongoing midterm plan, we are targeting double-digit CAGR growth. Specifically, we expect a CAGR of 18.3% for transaction volume and 19.6% for net sales. We are targeting approximately 66 billion yen in transaction volume. I would now like to discuss Uriho in the financial business. Our growth strategy for Uriho consists of maximizing the product of the guarantee amount and Uriho's market share. We seek to increase the guarantee amounts by using improvements to the quality of the services we offer, thereby attracting users. Additionally, we seek to grow Uriho's market share by expanding our customer base. Next is a review of the previous midterm management plan for Uriho. Unfortunately, realized results came in significantly below company forecasts, with an achievement rate of 90% for the guarantee balance target and 91.1% for net sales. On the other hand, the CAGR numbers continued to impress: 27% for the guarantee balance and 19.1% for net sales. So this is an area we will continue working to grow going forward. I would now like to go over the business conditions for Uriho. Uriho is a subscription service, and we offer 3 different plans with 3 different price points. Our mid and high-priced plans continue seeing steady growth, while our low-priced plan has stagnated somewhat. Now, some stakeholders don't consider this to be a cause for concern, since the high-priced plan is growing well. But the truth is that 85% of the 3 million companies that make up Uriho's total addressable market are SMEs that fit this customer profile. As such, there is a need for us to improve the value proposition associated with our low-priced plan as a way to encourage customers to use Uriho, and we position this as a key priority within the scope of the ongoing midterm management plan. Next are the priority measures in the midterm management plan for Uriho. We have divided our priority measures into 3 buckets, not by price, but rather by size: micro, small, and medium-sized enterprises, stable companies, and growing companies. Now, we define SMEs as companies with annual sales of 100 million yen or less. These are companies that require services like Uriho, but that don't necessarily have the resources to afford guarantees. In light of this, we are currently working to devise a simple, low-cost service targeting this class of customers, and which we would like to be able to deploy at some point during the ongoing midterm management plan. Second, there is demand from stable companies to use Uriho for credit management and to check the status of existing business partners in real time. Uriho also offers alerts pertaining to negative information about existing business partners. In short, stable companies have a use for Uriho within their credit management processes, as well as in terms of the customization of guarantee targets. Companies have specific needs in terms of which business partners should be covered by guarantees, so we would like to address this type of demand. Lastly, growing companies, such as startups, want to focus on growing their guarantees without worrying about credit risk. We offer pre-screening services to these companies, through which we provide credit information on a company before starting transactions. Lastly, we also offer flexible guarantee coverage for growing companies. Startups place tremendous importance on execution speed, and we want to secure business by operating in a more flexible way matching these growing companies' needs. Next are the main KPIs for the Uriho business. Over the course of the ongoing fiscal year, we are targeting double-digit CAGR growth. Specifically, we expect a CAGR of 14.7% in our guarantee balance and 21.4% for net sales. Next are our cash allocation plans. Allow me to start with a review of our cash allocation. During the previous midterm plan, we targeted a 1.5-fold increase in the cost to attract customers, and realized results were 2.1 times the fiscal year ended April 2022 baseline. The sales promotion costs target was 2.0 times the baseline, with realized results coming in at 2.6 times. Lastly, the development resource enhancement costs target was 2.1 times the baseline, with realized results coming in at 1.8 times. Circling back to what I said at the beginning, profit declined significantly in the second year of the midterm plan, prompting us to concentrate investment resources in order to buck this trend, and this led to a significant increase in the cost to attract customers and in sales promotion costs. This accounts for the 2.1-fold and 2.6-fold increases in the cost to attract customers and in sales promotion costs. Within the scope of shareholder returns, we are targeting a dividend payout ratio of between 45 and 50%. We distribute dividends twice a year. Lastly, we executed 3 separate treasury stock acquisition operations over the course of the 3-year period corresponding to the previous midterm plan. Specifically, we purchased 160,000, 700,000, and 1,100,000 shares, respectively, and will continue taking a proactive stance to share buybacks within the scope of the ongoing midterm plan. Next is a breakdown of our planned cash allocation. We expect to generate approximately 4 billion yen in cash flows from operating activities over the course of the ongoing midterm plan. As of April 2025, cash on hand stood at 4.3 billion yen, and we also have a credit facility limit of approximately 8 billion yen. We will be allocating this cash, directing approximately 3.2 billion yen to future growth investments. We are targeting a dividend payout ratio of between 45 and 50%, but in addition to this, we also expect to incur approximately 300 million yen in shareholder benefit costs. Ultimately, we expect a remaining cash on hand balance of between 3 and 4 billion yen. Next is a breakdown of this 3.2 billion yen earmarked for future growth investments. We will be allocating around 2.5 billion yen to B2B network equity investments, contributing to generating synergies with existing services or creating new ones. Second, we will carry out investment in our B2B network infrastructure as it pertains to development related to common accounts. This includes development costs, and the planned investment amount in this category is approximately 200 million yen. Third, we will be executing investment in the form of development costs for an amount totaling approximately 500 million yen. Specifically, the funds will go toward operational efficiency improvements to reduce costs, with a special focus on midterm plan priority measures. Lastly, please note that despite these various development investments, the Raccoon Group is nevertheless guiding for an operating margin improvement to 25.7%. Next is human capital management. Product strength and organizational strength are core values of the Raccoon Group. Organizational strength at the personnel level is what allows us to develop valuable products, and we position organizational strength as the human capital foundation that supports business growth. We are also actively promoting initiatives to enhance organizational strength. Raccoon will be putting in place a talent development framework, foster a corporate culture of psychological safety, and strengthen health and productivity management. We have also included ESG information as an appendix, which we invite you to review at your convenience. This concludes today's overview of the midterm management plan for Raccoon Holdings, Inc. Thank you for your time.